Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Taiwan index up 1.74%, Hang Seng trading with gains of 0.7%.
Anticipated 12,500 crore rupee public offering of HDB Financial Services.
The broader range is basically 24,462 on the downside and 25,116 on the upside.
India is still a favored destination for what we call as China plus one.
My steady state mid to long term market share ambition is 50%.
24,570 on the Nifty. We're up, barely up, but up.
The message that we've got is that everybody is cautiously optimistic.
About 4 blocks that will happen in today's trading session, and within the first hour itself, all of them have happened.
The Nifty inching towards 24,650 points up, Sensex gaining 160.
See, the thing is, we were kind of expecting the markets to go down.
Well, 24,600 thereabouts is where the Nifty is at for now.
Well, that is the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me are Surbhi and Nigel. And I think through the day, as we were seeing the wrap, every hour, it's not that the level changed too much, right? It's been such a quiet sort of a day, but holding up with the green buys.
Well, that's right. You know, the call this morning, Reema, was technical indicators were pointing to today you should buy the dip and you should play for the upside. The PCR had come to, the lowest we've seen, towards the lower end at 0.6. You had the FI net shots that moved to around 1 lakh contracts. And yesterday, the markets were down. I was going on making this point that the India VIX had cooled off. So it made sense today to buy. At around 10:30 when we were on Chartbusters, the markets were down 50, 60 points or thereabouts. So buying the dips today actually has played out. And if you look at the breadth of the market, you look at the, the frontline index as well, things are pretty okay. The only problem is the Nifty Bank. That's not participating and that's facing resistance at around that 56,000 odd mark. So I think that's going to be the crucial trigger for banks because of the rate cut that we are waiting by for. In the near term, it puts some pressure on NIMs. Not a surprise, but that's one factor that limits the gains out there. And just one more point, I've been talking about this golden crossover. That's when the 50 DMA gets past the 200 DMA. I made this point at the start of the series as well. That's an important bullish indicator. Very, very close to that, the 50 DMA heading towards the 200 DMA. So just keep an eye out. That could be the trigger, the technical trigger that markets are looking forward to because you've spent a goodish amount of time in this vicinity of around 24,400 to 25,100 odd. So that's one indicator I'm going to look at.
Absolutely. Intrinsically, it seems the market doesn't want to go down. I mean, despite all the negative news that's been thrown at it, and today is a day when these, doubling of these steel and aluminum tariffs that kicked in as well. But it's been a good picture. By the way, it's a good picture across global indices as well because European markets are taking things in their stride. I think the market wisdom generally around the world is that this whole negotiation is still going on. And the final tariff number, be it on cars, be it on steel, aluminum, other products, the final tariff numbers probably will be lower compared to what is being discussed right now. So that's the European picture, and it's not too bad. Here for us in our market, the mid-cap market is thriving once again. And two pockets definitely stand out. One is shipbuilders and defense, and we'll talk about some of those stocks as we go forward. Look at Garden Reach, for instance. Garden Reach, last I checked, was up about 6%. 6.5% for the time being. Even something like an Idea Forge. So some of these defense plays are doing well, and then railways are thriving. There's a big move on railway stocks. There's price and there is volume action on railway names today. Aircon, Railtel, RVNL, IRFC, the entire pack is moving higher. So definite momentum here. But even beyond this, remember we were talking about Swiggy earlier in the week where there were brokerage upgrades coming in. Morgan Stanley sounded out a very bullish note on Swiggy. That note came in yesterday. Well, the stock took some time to digest it perhaps, and today is a big move. 9% on the upside. So lots of action in the broader market space, lots of blocks, plenty of action beyond this 70-point move that the Nifty is telling us.
Eternal's also higher by nearly about 3%. So while Swiggy's raced away, and I think this is the best intraday gain that we're seeing for Swiggy in over a month, the mover in the large cap space is Zomato or Eternal, 3% up.
Well, that's right. And, the new listing, Aegis Vopak, the stock opened up with a cut of around 6%. From there, the stock has rallied close to 12 to around 15%. And the IPO price wasn't very, very cheap. It came in at the upper end, so the market is willing to look ahead of the market with regard to the management's guidance. They're going to save out on interest costs, and a lot of their terminals are going to come on stream as well. So the market's willing to look ahead, and that's why after starting off with a 6% cut on listing, you've seen the stock move up. And just the point that Rima made with regard to the broader markets, HCC, take a look at that stock. Big spike up in the last few minutes. It's moved to the high point of the day. Reliance Infra, I've been making this point. It appears there is some kind of reading with regard to that. Just going by the delivery, the price action as well. Yesterday, the stock was down close to 4%. From there, the stock has given you a 10% return. I'm not sure whether there's any kind of news out there, but I think it's Mr. Anil Ambani's birthday. That's the only cue that I have out there. But just take a look at that stock, 10%, and the volumes are massive. Yesterday, it went to 335. So from there, it's given a big part.
Massive, even on Reliance Power.
Yes.
That's the other one, 4% up today. And the kind of recovery from the 52-week low, Reliance Infra is up 160%, and so is Reliance Power. And these gains are these stocks are piling on gains now as we speak. So big moves. But let's find out what the trade should be. Last hour to go, 1 hour to go. Mitesh is now back with us for a few closing strategies. Mitesh, what do you have for us?
Good afternoon. So I think, the good thing is that the market has kind of managed to hold on to the lower end of the range. I think Nigel also mentioned, the PCR, which was very oversold. I think that still remains the case. So overall, I think the market, which is still doing 24,500 broadly, give and take a few points, about 25,050, 100 on the upside. And that's the way we approach it. You did mention internal. That's one of the stocks which I like. It's just on the verge of giving a breakout about this 244, 245, which was the swing high in mid-May. So by about 246 half year, keep a stop at about 240. Look for upside targets in the range of about 260 to about 265 on the upside. And the other stock which I like is UPL, United Phosphorus. That's a buy with a stop below levels of 633 for targets of 665.
Okay, all right, got that. Mitesh, thanks for that. We'll come back to you for some more questions in just a bit. But let's put the spotlight on some of these names, the PSU names that have been doing well. Masgao Dock has seen a sharp rally of late. The stock has surged 10% in the last 1 month, and it's also outshining quite a few Nifty companies in terms of market capitalization. And remember this at a time, today it's of course really quiet. Let's pull up a longer chart. Maybe we can pull up a year-to-date or a one-year chart. And this is despite the fact that the fourth quarter P&L was not that great for Masgao Dock. But despite that, buying has picked up again. Obviously a great performer in the last 1 year. And even this last leg has been fairly sharp. Let's go across to Hormaz to understand how the market capitalization shifts are happening. Hormaz, over to you.
And Masgao Dock, as you were mentioning, right, a big outperformer over the recent past as well. And this is after, at the highest point of the day today, the stock was up around 3.5% before it gave up those gains. And at that point, the market cap of the company stood at around 1.43 lakh crore rupees, which was higher than at least 8 Nifty companies as of now. And if you take a look at the Nifty companies at which the market cap was higher, the list goes Hindalco, Cipla, Shriram Finance, Hero MotoCorp, Tata Consumer, Dr. Reddy's, Apollo Hospitals and IndusInd Bank. And this is despite the recent correction that we have seen last Friday and in Monday's session when the stock cumulatively fell 10%, as you highlighted that the fourth quarter numbers were not their best. There was a sharp decline in its margins because of higher expenses, and that is a result as which the stock fell from its record highs. Remember, the stock closed at a record high last Friday before the results were announced, and since then it's been in a bit of a downward trend. For FY26, now the management is expecting an 8 to 10% revenue growth. They're also saying that the order book will cross 1 lakh crore rupees provided 2 major orders are signed, and those 2 major orders are in the P75 and the P75I submarines, which are expected to be signed this year. And if those happen, then the order book will cross 1 lakh crore rupees, and that P75 submarine order is valued at anywhere between 30 to 40,000 crore rupees, and the management said that this might happen sometime next month. So if that happens, that of course will be a positive trigger for the stock. Antique came out with a note a couple of days earlier on Masgao Dock. They maintained their buy recommendation on the stock, raised their price target to 38.58 from 34.33 earlier. So more upside is what Antique is projecting here. They said that despite the near-term challenges, the medium-term outlook for the company remains strong, and the fact that they are going to also engage in capacity addition over the next few years, that is also going to provide a further fillip as well. And just to add on, when the stock was at its record high on Friday, the market cap was in excess of 1.5 lakh crore. And in adding to those 8 names, you would add Eicher Motors to that list as well. So Masgao Dock among the outperformers, and despite this recent correction, the stock is still up 60% on a year-to-date basis.
Thank you very much for that. More gains coming in for this multi-bagger. Prakash, we keep asking the question, right? Masgao Docks, is it time to buy? And then somehow you realize the next time we've asked you, the stock has moved up even more. From here on, what does one do?
And thankfully, every time I have been asked, I have said not yet, and the price still goes up. So even I have been quite unawares. But, essentially, this is a secular shift that's happening. And as Norman was explaining, we have seen the reset of the entire defense pack. And this will continue. It's a secular trend. This is going to last for years and decades. So I think there will be enough opportunity to buy into the space, including some of these names. But the day you have such great news chasing them, you have a GRSE which is getting into a polar research vehicle. I mean, these are days when you don't actually expect these stocks to be bought into. But on days when they fall for the wrong reasons, that's the time you could probably look at. Nibble into them is my suggestion. I would nibble into these stocks at lower levels, not at these elevated levels. And you might get lower levels soon. So it's not that, that's kind of unthinkable of sorts at this point in time.
Prakash, wanted to ask you about Reliance Infra, Reliance Power. Anything you're picking up there?
To be honest, Nigel, there's nothing which is in the news flow in terms of except for some hope trades that have been building up in terms of a lot of things getting restored and reset for them. But I haven't come across any very dependable, veritable kind of news flow which suggests that there is some change. But the momentum that is there, and this has been on for now maybe about 7, 8, 10 days. It's been constantly building up. So I'm sure there is some anticipation of positive developments, but not yet. And I would definitely not be the best person to judge in terms of what's likely to come just looking at the screen.
Let's get chatting about PI Industries then. That's also in focus after one of the major customers, that's Kumai Chemicals, has revised its outlook. Ria joins in for more on this. Ria?
That's right, Rima. PI Industries has been in focus today. The stock had jumped up almost 5% earlier in today's session after a very major customer of the company called Kumai Chemicals has revised its outlook higher for the year ending October 2025. The revenue outlook has been revised higher by 9% and the EBITDA by 34%. Now, Kumai Chemical is the biggest customer of PI Industries, which is why we're seeing a big move on the stock today as a result of this. Now, remember the March quarter results for Kumai Chemicals was also better than street expectations. Sales were up around 10%. Even the operating income had seen a surge of around 36%, and the net profit has also jumped up around 61% compared to the previous year. PI Industries, on the other hand, on the 21st of May had reported quite a weak set of numbers, which is why the stock was under some selling pressure back then. And they had also given weak guidance for the year going ahead. They had guided for single-digit growth for the CSM business for FY26, which was below street estimates. But today, of course, the stock is higher on the back of this new development.
Okay, all right. Thanks for placing that on our radar, Ria. Appreciate it. Prakash, so PI Industries, hi afternoon. I mean, for PI Industries, it's been stop and start, right? The cycle hasn't picked up in a big way, at least till now, on this whole agrochemical piece. What's your sense? I mean, how would you... and this is not for an immediate trade here and there on a piece of news, but in general, does it merit a place in the portfolio?
Yeah, good afternoon, Surbhi. So, as we know, good news and good prices don't come together. Yeah, so this has to be bad news and good prices. Now, the management has been very conservative, realistic in terms of setting expectations and guiding for moderate growth. We also saw when Kumai was not doing well, the impact it had on the PI stock. And that is exactly what seems to be reversing. The other thing that's happening is you saw commentary from Aarti Industries. Now, of course, they might not have like-to-like businesses, but what's changing, and some of the other largish chemical names, what's changing is the fact that everybody is looking at doing a Sumitomo kind of a solution, which is we don't want to buy everything from China. Even if we are buying 60-70%, it's a very high level of risk. And The other, chemical plays which were very evident, which were kind of doing a little bit of competitive intensity, adding to that was Turkey and all. Those have also stopped. Now, Brazil has come up with Brazil, Argentina. These are economies which are reviving in a very significant way. In fact, you'll be surprised to see some of the metrics that are changing. And tariffs, no tariffs, these are agri-based economies which have started looking up very positively. And the cycle is different there from a seasonality perspective. So if those areas start looking up, there are a lot of off-patent, chemicals that are going off-patent, which means a lot of the likes of PI can get in. But this is slightly medium to long term. You need to take this with a 12-month, 18-month kind of a perspective. But I think these are great levels to get it. Whichever companies PI is as good as any. It's available at probably a PE of 36, which is one of the lowest that you would have found in the last 4-5 years. It's always had a premium. And that's because of the moderate growth. So I think it kind of gives you that opportunity to buy into it. This news might sound very, might sound very short term in terms of this thing improvement. But my sense is that the improvement is more secular across the spectrum. So definitely look at the space. The agrochemicals will be the first ones to actually start looking up before the other chemical sets will start doing better.
Okay, all right. Prakash, what about Stovecraft? It appears, there was a large seller. Volumes were quite high. And post that large trade, I think the stock has moved up. So what's your view out there? Because they have the, the facility to produce more, but the numbers just don't come. What's your view? In fact, in the last year, they managed to grow, while TTK Hawkins, they actually degrow. But how would you view the stock?
So, Nigel, TTK and Hawkins, for its own measure, is going through some sort of issues which are probably of their own making also, because they are much larger players, very heavily brand heavy and, all of that. But Stovecraft, to be fair, has tried doing a lot of things, has amazing facilities. I've had a chance to see the facility also some time back. They've got into very high value added products, the French cookware and all of that, which is extremely high end. I mean, equivalent to French cookware. It's not exactly that, but they're trying to replace that. They've started supplying to a lot of the larger, big box stores like Walmart and all. But somewhere they are missing out on something. There've been a lot of exits, in fact, from senior management, which I haven't been able to understand the reason for. But there's a little bit of discontinuity. Whatever they've tried setting right, whether it's warehousing, new facility, production lines, they don't seem to be giving that continuity benefit. And that's where things are. And then, of course, some time back, steel was playing villain out there. But all of that said and done, it's a great franchise. The brand building has been very, very effective. They're available in terms of distribution everywhere. So somewhere they should get things right. But Stovecraft has been a bit of an enigmatic story. Every time it does promise, but somewhere the delivery is amiss. So let's hope for shareholders who own it, things look up. But my sense is it will take some time for it to repair. And these big blocks that are going out is probably a sign of people wanting to cash out that they've been holding for quite some time without great improvement in the metrics.
Okay, let's just quickly touch upon Bharti Airtel. That's the other big mover in the large cap space, where Macquarie is very bullish on the stock, even after the run-up that we've seen. Remember, Bharti Airtel is up 165% in the last 3 years. Now, Macquarie has a bull case target of 2350, a base case target of 1,920, and a bear case target of 1450. So they basically laid out 3 scenarios. In all 3 scenarios, the ARPU is inching up. In Q4, the ARPU of the company was 245. In the base case, they're saying it heads to 290. In bull case, it becomes even 300. But even in the worst case scenario, ARPU does go up to 275. They've assigned probability to each of these scenarios. Now they're saying there is a 50% probability of the base case playing out, but a 40% probability of a bull case, playing out. So when they do a weighted average of, these scenarios, the target price that they come up with is 2,050, and that's got about a 14% upside from current levels. They also say that going forward, the big catalyst for the industry is continued tariff repair, tariff hikes, etc. But the other one will be the Jio IPO, because that will be supportive for valuation multiples for the entire sector. Prakash, do you see the bull case playing out for Bharti Airtel, 2350? Or is that being a little too aggressive?
Well, yes and no, but it does seem possible. I wouldn't be surprised if something like that happens, maybe on a slightly longer time frame. And you also know the way Bharti's been able to manage improving the ARPUs within the entire sector. I mean, they're way ahead of Jio, for instance. While Jio has far number of clients and subscribers, it's a quality of subscribers that they have managed to do very well on. Now, how do they grow from here, or are they able to get some migration done from the VI customers who are probably panicking and moving out? Will actually decide on their improvement in continued improvement in ARPU. But yes, you're right. It's finally you'll have to wait for the Jio announcement as and when it happens. And if that kind of sets a different benchmark, there's no reason why Bharti also should get valued. And remember, people will never choose to invest only into one stock within telecom. They'll always want to diversify because it's anyways a limited player market. So if there's allocation to be made in the Indian telecom space, it'll go to both the players, right? Jio and Bharti. And from that perspective, I see a lot of money coming into the Jio fold once the IPO contours are out. So let's wait for that, but not impossible for it to kind of do another $500 from here as the bull case is anticipating. But the 2000 definitely looks very, very realistic.
Okay, that's Bharti Airtel. Finally, before we let you go, Prakash, weigh in on the big quick commerce debate. Stocks have been going up, and there's so much going on, right? I was also going through this news piece that Money Control put out earlier, saying that maybe Zepto's IPO is getting deferred. The company, however, has been telling us that they still want to be on track, at least file the DRHP this year. And then they could be raising another big round with the overseas investors as well. Now, what to do? No one's debating that this is big disruption in the way we consume and live and eat. But the point is the cash burn. Buy or not to buy the stocks?
No, so till they kind of burn themselves to death, one of them will have to do it at some point in time. I'm sure it's happened in most of these sectors and segments that somebody kind of just keeps selling off, not making money, and then losing, bleeding to the to the level where it's unsustainable. From that perspective, you really ask me, Zomato doesn't seem to be in that spot. So you are far better off if you were to play that sector segment. That's the way to do it. But food delivery aside, I think the Blinkit model is something which is what people are banking on, and I think that itself will go through a lot of evolution as the nature of consumption changes. We've seen consumption change dramatically in the last 2 years. Post-COVID, things started differently. They are very different now. And things could continue to look very different, especially when they go into tier 3, tier 4 cities, and which hasn't happened yet, by the way. So once that happens, you'll probably know what's the full stack looking like or likely to look like. So I would wait for the eternal thing to be really eternal in terms of growth. But at this point in time, no allocations is what I would sit with.
Okay, all right, got that. Thanks very much, Prakash. Good to have you on and get perspective on all the stocks that we've discussed today. Thanks very much. We'll see you again soon. Well, with that, let's move on to a special conversation that Nimesh and I had with Ridham Desai, Managing Director and Chief Equity Strategist at Morgan Stanley for India. And we asked him about his views on the Indian market, valuations and a lot more. Ridham, incidentally, says that Indian stocks are cheap. Take a look.
In my humble opinion, and it's not even humble, I think stocks are cheap. Okay. Stocks are inexpensive in India. I wrote that day before yesterday. My title of my report is Equities are Inexpensive. Bond yield in India, 10-year bond yield is 6.2%. The equity yield is 5%. India is a growth market. The gap is -1%. This is cheap. Yeah. Look at Nifty in gold ounces. Either gold prices fall or Nifty goes up. It's cheap. The decision on setting up a local manufacturing facility in India, I don't think has much to do with the tariffs that President Trump is proposing. A lot of these plans were already underway pre-April, and I don't think are changing dramatically because of the tariffs. One thing which we need to bear in mind is India is not becoming the next China. Mm-hmm. I don't think the world has appetite to create capacities like it did in China in the last 20 years. But the appetite to diversify supply chains, the appetite to build facilities in India to cater to India's home market, that's clearly there. So India's manufacturing share of GDP will rise. But you should not be holding your breath for the next China. It's not happening.
Welcome back. Well, the markets are trading more or less, unmoved actually from the time we started off the show. I think we have BEL. The stock, in fact, in the last 1 month, if I have noted correctly, it's up more than 10%, I think. So big move is what we're seeing. Now they've won an order of around 2,000. That's KC. KC has won an order of around 2,000 crores. BEL has won an order of around 540 crores. So both those two stocks, very, very buoyant in trade. In fact, BEL, as I said, not 10, 15%. It's up 25% in the last 1 month or so. So super move is what we're seeing. IDBI Bank, that's another stock that's come on my radar with regard to a bit of an uptick that we've seen the last few minutes. That one's been moving on large volumes as well. So I think we'd like to get that stock up for you on the screen. And from the other names, we were talking about some of these stocks, like Ircon that were gaining. They were up 10%. Now they're up 15%. You have Eternal that's building onto the gains, RVNL as well. So a lot of stocks out there doing a thing of their own. But let's get in Jitendra Sriram, Senior Fund Manager, who's joining in on the show at Baroda BNP Paribas Mutual Fund. Hi, Jitendra. Good afternoon. Good to see you in. Which camp are you in? Constructive or cautious?
So I would say that from a market perspective, we are quite constructive. Although I feel that in the very near term, you might actually see the market consolidate a little till the earnings momentum picks up. I think if there is one parameter which still is a little disappointing, I would say that has been that earnings is still to lift up. All the other parameters like monetary policy, fiscal growth, all those I think are flashing the green signal right now.
All right, but we'll require an additional trigger, Jitendra, to move up from here on, because the markets have moved from around the 21,700 odd mark. We're back towards closer to 25,000 odd. What could be that additional trigger? Earnings would be great to come by, but anything else, according to you? Maybe some part of that China plus one has already been baked in. India is a structural story. What else?
So I think one other parameter which could have a lot of sentiment booster for India could be the finalization of tariffs and all that, which with the Trump administration, as and when that comes by. See, it started off at a very high point, and obviously it's over the period of time, things appear to be toning down a little bit. And once we have actually said that, this is it and nothing else over and above this, I think that should be one kind of a major relief part of it. The second, I think, is that we are just, the history right from the Russia-Ukraine conflict. We have had a tighter monetary policy all up till about October, November of last year when we started the easing process. My suspicion is that even the easing process and the transmission lags that take place, it will take us at least another 12, 18 months that we should be probably in an easing phase. So that should be the other positive which is there for markets as such.
Jitendra, so just getting your sectoral view, from the start of the year to now, which theme has positively surprised you and which has worked contrary to your expectations? It didn't do so well, so there was a bit of a negative surprise. Yeah, go ahead.
Yeah, sure. So one thing I would say has been that in the case of something like quick commerce and the consumer discretionary space, I would say that some of obviously the break-even points or so on and so forth have got a little deferred from what we originally began the year with. So to an extent, that has been a space that has come off a little bit. I would say where I have been actually positively surprised has been on power and power equipment. We have continued to see a lot of strength in that space. So it's not only the new areas of renewable and all, but even in the space of thermal, traditional power equipment, transmission, etc., has continued to do exceedingly well. So that's been a space that we have actually been positively surprised by.
Jitendra, great to have you on. Rounding up to the policy on Friday, and the broad expectation is that we should get 25 basis points this time around, and maybe more over the rest of the year. In the financials universe, what are you playing? Banks, non-banks? Where should one be in this downward rate cycle?
So if I were to look at the subsegments of financials, when you look at private banks, state-owned banks and all that, we are generally as a theme far more positive on that. So it's a smaller list for me to talk about what we are probably not so excited about. So one is obviously the MFI space, which continues to see these stresses after the changing regulations in places like Karnataka or Tamil Nadu and all that. So that's a space we have generally stayed away from. The second has been a little bit of a valuation challenge in some of the areas exposed to capital markets, because the valuations have become quite stratospheric in certain cases. So that is an area that we have tended to be a little softer on, or we have taken some money off the table there. But by and large, I would say banks, private banks, state-owned banks, also NBFCs selectively, plus even insurance, etc., we've been quite positive about.
How worried are you, Jitendra? Last few days, I'll tell you what, 15 days ago, we had put out this piece on CNBC-TV18 about the kind of liquidity that mutual funds are sitting on. And that gives you comfort, right? When you know there's liquidity out there, 2 lakh crores of cash from pure equity mutual funds, 7% of the equity AUM, you feel good. Suddenly, this paper supply is just non-stop. Nimesh joins us. He tells us today there are 2 deals. Next day, there are 3. Some days, there are 4. How worried are you about this fresh supply? Because you want some cushion, right? You want the mutual fund industry to have a good amount of cash. One would say our markets are maturing, good way, as much as liquidity, is being thrown at them, they'll be able to consume it. The other point is saying, hey, this is getting worrying. We saw what happened in the last year. At some point of time, it gets excessive. Your take?
Yeah, so I do agree with you in a sense that, too much of supply will obviously have its own challenges to contend with. But having said that, I would not compare it with last year, because last year, the primary supply of paper was way too high. So to an extent, what impacted valuations also was that we had too much of paper supply from the IPO and the QIPs, etc., etc. This year, it's been largely more profound on the secondary market sales, a PE fund unwinding or a promoter unwinding like you had in the case of ITC or something like that. So you had more selective sell downs, which is there. And I don't think the magnitude is very similar to what you saw last year. Last year, the paper supply was quite incredible. So I would say it is definitely something we have to watch out for. But as of now, I won't ring the alarm bells at this point. It's not so excessive that it is actually proving to be a dampener for markets.
You spoke about, quick commerce and how it's negatively surprised. The competitive intensity has pushed forward. Has been pushed forward versus your own expectations. So when it comes to stocks, with this background in mind, what would you do? Is it time to, not buy them at this juncture, or this is the time to accumulate because things will turn around eventually?
So if I look at the space from a longer term construct, I'm extremely positive about it. You also mentioned a little while back about how the way we consume things and way it's all dynamically changing. So it's something that's quite exciting. But I think obviously there's not a linear story in a sense. You are going to see a secular run go through it. You will have these phases when, competitive intensity accelerates in between, deteriorates in between. There'll also be phases when, because of this instant, the quick commerce kind of thing, you suddenly see that the intensity worsen, and as a result, your break-evens are pushed back, etc., etc. So I would, at this point, we have actually, in our portfolio, we have trimmed a little bit of our weightages to quick commerce. So you could say that we are not actually biting right now. We like the space. We will wait for better entry points to get back or build back weights on this.
And in power, where you liked the narrative that's playing out, the numbers that have come through, have you increased your exposure? And in which part of the power theme, the value chain?
Sure. So I think let me take it one step up from a much more top-down view. I would say you have recently seen these instances when, trading prices on the IEX and various other energy traded markets hit a realization next to nothing as such. There were periods when prices really collapsed. At a conceptual level, we are preferring base load plays over merchant plays. So let me put that as the first thesis that we are going with. We like people who have long-term contracts, who have much more safety in their cash flow generation and all that. So some of these PSU generators, etc., which typically have extremely long-term agreements for purchase of power, that's where the space we are much more focused on. Alternatively, I would say the other area that excites us is also the downstream of that, the power equipment space. So whether it is thermal power or also it is transmission equipment, those are areas that seem fairly interesting to us. I think for the next 2 year, 3 year, you will see a fairly decent buildup of revenue growth there.
Okay. All right. Jitendra, we'll leave it there. Thank you so much for joining us. Good conversation this afternoon, as always. We look forward to the next one. Well, with that, we do have to take a very quick break. Come back on the other side, and as usual, it will be time for D Street Chatter. Nimesh will join in, and then some final trading ideas coming up with Mitesh as well.
Welcome back. Well, the market's holding with good gains. It's a good-looking screen. BEL is the one that's moved well. Swiggy and Zomato continue with their good run. We had that positive news flow coming in on Reliance Infra. So that ticked up from around 370 to around 380 odd, couple of order wins as we mentioned. So good times actually. But let's get in Mitesh Thakur, who joins us back on the show. Mitesh, tell us what to buy today or sell tomorrow for a reverse trade.
So, I think the first stock on my list is CESC. After a correction from 175 to about 160, the stock is reversed and bounced back. So BTST with the stop at about 166.5 for targets of 172. Though I think positionally I expect it to clear, head towards 180 odd levels. And the other one is SBI Cards. Disclaimer, I have a very minor focus position over here, so there's vested interest, but it's trading above its consolidation and at the 52-week high. So BTST here with the stop at about 934 for targets of 957.
Thank you very much for that. But let's talk about the big story. Dalal Street is seeing a frenzy of block deals, 4 of them today. Vivek joins in with the updates. Vivek.
Right, 4 of 4 block deals today. This is on top of almost 4 to 5 block deals that we saw yesterday. Well, quite a few names on the radar. Our colleague Nimesh and myself highlighted, pre-market opening that quite a few large blocks were on offer and along expected lines. The first stock on the radar, of course, was AB Fashion. This is the demerged entity, and in this particular entity, remember, Flipkart held almost a little over 6% stake. So today, as per the term sheet we managed to access last evening, Flipkart has sold a little over 600 crore worth of shares. Now, the other large stock, Indegene, remember, Indegene, the pre-IPO PE investor, that was Carlyle, under the name of CA Dawn Investments, held a little over 10% stake, and they too have completely exited their stake as far as Indegene is concerned, and this particular block was worth a little over 1,500 crore. The other stock on the radar, Tata Technologies, very interesting. TPG Rise, remember at the end of March, held a little over 6% stake in the company. They sold close to 4.9% in the month of April, and within a month they've gone ahead and sold the remainder of the stake as well. Again, a clean out trade as far as Tata Technologies is concerned from TPG Rise. And lastly, Alchem Labs, the promoter entity this time around, selling and trimming their stake, almost 1.4 equity was sold, and this is from the promoter entity as per the term sheet we managed to access last evening.
Thank you very much for that. For Tata Tech, the issue price was 500 rupees. It had a very strong listing. It opened at 1,200, went on to hit highs, I think, of close to about 1,400. And from there, the stock retraced. So 1,400, I believe, I think was the high around the listing time. From there, the stock went down to 600 as, just as recently as last month. And since then, the stock has recovered. Let's pull up a one-year chart and you would see the recovery that's ensued from levels of 600. Tata Tech, clean out trade, and that's why the stock isn't falling too much. Supply overhang is now out of the way. Nimesh is now with us for D Street Chatter. Nimesh, are there more blocks that are going to get announced for tomorrow?
There will be, Rima. So I'll come to that, but first on the markets, a decent recovery from an extremely oversold levels. Normally we've seen when the PCR turns around 0.64, 0.65, we see a decent pullback, and that's exactly what's played out in today's market. I guess there is a lot of short covering as well in today's market in many individual names. So a lot of the FNO stocks, which are the big gainers today, are seeing a bit of short covering rally in today's market. From a flow perspective, it's still quite mixed, and I'm saying mixed because, again today, because of the 4 large blocks, the number will look pretty large in the FI and the DI data. So that's something to watch out for. The sector which clearly tends to outperform and surprise the market is the PSUs. Today is a day for the railway PSUs to do well. So big move and big momentum as well in the railway PSUs. But there is a bit of rotation happening within the PSUs as well. One day you'll see the PSU banks, next day rail PSU. So that's the trend. It looks like it's more of a retail play, but it's going on for the last many days. I guess the big macro thing to watch out would be the RBI policy. And I guess 25 basis points is pretty much in the price, so to speak, from a market perspective. But that will be a big trigger to watch out. But the trend of large blocks is going to continue. And looks like today's rally is a bit of short covering as well in many individual names.
Okay, all right. Nimesh, what about individual stocks? What are you picking up?
So the first stock on my list is ILD. That stock has been buzzing off late, but I understand there's going to be a fundraising very soon. Either a QIP or a fallen offer is something which is likely to come in ILDA very soon. So that's the first stock. Second stock is Emphasis. It's been in the news in the last couple of days. But again, if you look at the 1 month chart, much been consolidating in a narrow range. But even in Emphasis, the indication is that maybe over the next few days or weeks, you might see a large block as well, even in Emphasis. So that's, again, the private equity investor is a likely seller in that block. So that's something to track there. The third stock is Jubilant FoodWorks, a big up move in that name today. There is buying interest from larger FIs today. And also, interestingly, there was a Citi note, and they put out a positive catalyst watch on Jubilant FoodWorks. But just to warn the viewers, in the entire Jubilant group, including Jubilant Foods, Jubilant Ingrevia, as well as in Jubilant Pharmova, there is a very strong indication of promoter stake sales coming in. So watch out for that in terms of blocks in the Jubilant group companies. And the last one is Bellrise, a recent listing. I've seen a bit of momentum today. The volumes are quite high in today's market. So expect high delivery volumes. And I understand one large global fund who was an anchor investor, as well as some domestic AIFs, have bought in today's momentum in Bellrise.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's get in Mayuresh Joshi, Director Research at, who joins us on the show. Hi, Mayuresh. Good afternoon. Good to see you in. Mayuresh, any one stock that you'd like to track for today? I mean, there are a lot of action from the broader markets, but let's throw this out to you. One name that you could share with us?
Afternoon, Nigel. No, again, I think defense is one theme that has been buzzing all throughout. And our take in terms of how earnings have been stacking up, Para's defense is something that we very recently added to our model portfolios. Again, I think if you look at the construct in terms of the order book that the sector is sitting on, and specifically Paris Defense, I think decent order book. And they've translated that into numbers. So on an annualized basis, if you look at FY25 or FY24, the top line has grown significantly. There's almost 100 crore jump in terms of top line in absolute numbers, from 245 odd crores to almost 345, 350 odd crores. But the more interesting aspect has been the operating leverage. And because expenses have been kept under control, margins have probably improved quite significantly in the last 1 year. And therefore, bottom line growth has been significant. And that is getting reflected in the EPS numbers. So the EPS has almost doubled in FY25. It was 8.77 odd rupees in FY24. It's almost 16.42 as we end this year on an annualized basis. Obviously, as we head into the next 2 years, there are key segment, which is going to be optics and optronics, which probably has a larger EBIT margin share. As that gains more traction, the overall EBIT performance should largely improve. And even the defense engineering segment should have a decent show going forward. So our own sense is that FY26 will obviously be worked on with FY25 as a higher base. But the expectation is that the execution might continue. And there should be some element of earning stability that can come through. So the ratings, ranking, institution holding, all the parameters that we see in CanSlim are getting fulfilled absolutely by this place. So Paras is something where we believe that within defense, this name can continue.
That. So any other additions that you've done to your portfolio? Paras is one.
Afternoon, Nima. Again, I think we added Deepak Fertilizers, but I think it's run up. We obviously discussed that last week as well, but in a factor of a few days, I think it has run up quite significantly. But this space is very, very interesting. And therefore, I think from an entire sectoral bias perspective, the expectation that you probably got in terms of fertilizers as a theme doing well. And obviously, Deepak has that added advantage in terms of the TAN portfolio that it carries, the addition that it is doing both in the TAN portfolio as well as the concentrated nitric acid portfolio, where the capacities will go to 1 mmTPA for TAN and almost 1.2 mmTPA for the nitric acid portfolio, where realizations and demand is expected to be reasonably strong going forward as well. And let's not forget the core fertilizer segment, the soluble and the high specialty fertilizers that they are into, I think are expected to do significantly well as well. And therefore, I think the balance sheet performance with expectations of stronger margin delivery expected to take place and better bottom line growth reflecting in better return ratios is something that can play out. So I think this is a very interesting space. This has been a recent addition. It's obviously run up. But one stock that we've kept on the radar from the same space is Sharda Cropchem. Good set of numbers. Exports are holding up. Management sounds very, very positive in terms of the core portfolio, specifically the agrochemicals portfolio, doing exceedingly well next year. The expectations in terms of EBITDA margins, which settled around 15.5%, ROEs at 12.5%, should show improvement with farm gate prices, realizations expected to improve. And because they've got a front-end integrated model with their sales force probably operating in most regions, including North America, including Europe, that's the added advantage that Sharda probably gets. So Deepak is something we added, but Sharda is something that we are keeping on.
Okay, all right. Got that. Mayuresh, good to be listening to you. Thank you for joining in today. Just want to get your sense on this whole railway rally. You know, usually these stocks end up moving in a pack. Something or the other, some momentum-driven moves. I mean, beyond just a trade, do you like anything here?
From a tactical perspective, I think they might be just momentum trades in our opinion. And therefore, I think the macro tailwind that happens for the sector is obviously the allocation that has happened in terms of the budgetary segments that have probably come through for railways as a whole. And obviously, I think central and state governments are expending a huge lot, both in terms of railway lines, building up of railway infrastructure, not restricted to railway stations, and obviously the metro rail that are probably coming up in different tier 1, tier 2 cities as well. And therefore, I think out of the entire pack, you obviously seen stocks like RVNL, RateL do exceptionally well. the momentum can very well continue. But Tex Macro is somewhere where the stock has just broken out of all its moving averages as we speak. And therefore, I think the tailwind that Tex Macro probably carries. 3 years back, I think it was a story where the balance sheet was probably struggling in terms of execution, in terms of top line growth, in terms of margins. They've probably turned that around in the last 3 years. The expectations of more orders coming their way, more wagons expected to come their way as well, along with the maintenance contracts related to all these orders that they probably expected and have won so far, probably gives them that leverage in terms of more consistency in terms of revenue flows and margin delivery as well, which might probably then mean that out of the entire pack, maybe the consistency numbers that one really seeks for outside RBNL and Realty. Obviously, Tex Macro is one stock probably to count for. But I think the rating rankings are a little bit on the soft side.
Okay, Tex Macro, but you, I mean, no apparent reason for today's move. Nothing that you've heard. Nothing fresh.
Nothing fresh in terms of triggers.
Incremental trigger. Yeah. Okay, all right. Perhaps just some stock picking that's going on. Got that point. But we've been talking about a lot of stocks that are moving higher today. Let's also discuss one that has had a pretty rocky ride. And I'm talking about Spark, Sun Pharma Advanced Research. Spark has lost its spark today. It's been down about 10-15%, make that 20%. This after one of its under development psoriasis drugs failed trials. Ekta is here with more details. Ekta, I mean, was it a very significant drug? What more can you tell us?
Thanks for that. Well, yes, both these stocks are in focus, Sun Pharma as well as Spark. Spark is the R&D arm, which is listed separately of Sun Pharma. Now, Sun Pharma announced the top-line results from the phase 2 trials of SCD-044, which is basically a molecule under development. It is basically being studied for psoriasis as well as atopic dermatitis. The drug has not met the primary endpoints in either study, and the development of this particular molecule is now being discontinued. No further clinical trials are being planned. Sun Pharma and Spark will be assessing next steps for the compound going forward. Now, in terms of Spark, what the impact is that Spark has licensed the molecule to Sun Pharma, and they were expecting the phase 2 results to come through and were due in Q4 of FY25 and Q1 of FY26. The stock has run up over 70% from March to June of 2025 in anticipation of these results. Now, analysts say that one of the more advanced molecules, this is one of the more advanced molecules in Spark's pipeline. Now, what will happen going forward will be a couple of key things to watch out for Spark. Other molecules in their pipeline, for example, SCD-153 or SBO-154. They are also overall looking at cost cutting. They're cutting manpower, for example, by around 30-odd%. The company says that as of December 2024, said that there is available debt and cost optimization, which will provide them a runway till May of 2025. And the expected milestones were expected to defer the imminent need for fundraising. The stock, however, is down 35% from its 52-week high, which it hit in July of 2024. So these are a couple of key things to watch out for. When exactly will they need to raise funds going forward? What would the other molecules in the pipeline look like for Spark?
Thank you very much for that. And let's get some opinion now. Morgan Stanley's chief global economist, Seth Carpenter, is bullish on the India growth story and believes that India could take up a greater share of the global manufacturing pie. Listen in.
Yeah, it's a great question. So the Indian economy is clearly quite strong, and we have, as a research house, been bullish on the Indian economy for quite some time. We see both short-term cyclical factors to be optimistic about Indian growth and medium and longer-term secular factors. Inflation seems to be under control, and it means the central bank will have some scope to ease, especially with energy prices falling, with the dollar coming down. It gives the Reserve Bank of India quite a lot of operating room. The medium and longer term support from fiscal policy, supporting infrastructure, supporting being very pro-business, we think means that there's a long way to run for this expansion. And so we're pretty constructive on the outlook for the Indian economy, both this year and for the next several years to come. The economic as well as geopolitical, let's call it rivalry between the United States and China is a key factor in all of these policy discussions. We think Chinese growth is going to remain on the soft side because they've been in this deflationary cycle for some time. The government response has been largely loaded towards supply improvements, and so we haven't seen the Chinese economy roaring back. And I think that's going to be likely to stay for a while. So what does it mean for the rest of the region? Well, I think global trade will slow down. Supply chain diversification, though, was underway even before President Trump put on tariffs in his first term in office. Global supply chain diversification was going on before COVID put a sharp point on all of this. I think that trend is going to continue. India is very well placed in that regard with a manufacturing ecosystem that is growing to take up part of that open space, shall we say, in terms of global trade and global supply chains.
Welcome back. Well, a few stocks actually are, moving up, though the markets are consolidating in this range. BSE, I think we should get the intraday chart out there. That stock, in fact, is perking up. And you have Tata Chemicals as well. That's the other one in there. BSE, what a ballistic move, actually. I think you just pull up the longest time horizon that we have for BSE. Just take a look at the way the stock has moved. Not mistaken, it's a multi-bagger from 2022 onwards. BSE, the stock price, 12 months, you have more than tripled your money. Wow. And it already had a big run before that. Mayuresh, what is your take? Unlisted market, people looking at NSE and saying they're happy with, the increase that they're seeing the stock price there. But BSE, the much smaller player, but who's trying to pull some market share on index options, that one's going, all guns blazing. Your view?
Oh, absolutely. There's no stopping BSE, Nigel, as we speak. And therefore, I think out of the platform businesses that we've got, or the exchange businesses, BSE is the only listed player doing pure equities, obviously, but MCX, which does commodities as well. But NSE, its unlisted arm, also has been reacting very, very positively in terms of the moves that BSE is making. Obviously, it's an annuity-based business. The kind of expectations that we really have as a base case scenario in terms of more additions happening to both the demat account holders as well as subscribers in terms of traders and investors to the stock exchanges. I think that is going to drive volumes ultimately. From an annuity perspective, again, I think the annuity business that gets built in for BSE, they've got the Star MF platform as well. The depository business that also gets some of parts valuation. And therefore, I think as the Indian markets mature even more, I think exchanges will have a more pivotal role to play. Obviously, you can keep on arguing about valuations. But I think the numbers will keep on coming on a steady state basis as we move in the next few quarters and years. So yeah, expensive valuations, but anybody holding should continue.
Okay, that's BSE. That's definitely a space that's created a lot of wealth. Mayuresh, give us one moment. The earnings season is over, so give us one or two of your top earnings picks, from a stock purchasing point of view. What really stood out for you this quarter?
Apart from the additions where we did, where the earnings have actually stood out, I think within the pharma space, Strides Pharma is something that has struck us as one candidate which has delivered very well in terms of numbers. And again, I think the outlook that they're probably given specifically for the US business, they closed the US business at $296 million odd. They're expecting the US business in FY26 to hit $400 million odd, and that might get aided by 15-20 launches that they might do. They've got a few ANDAs in the pipeline and a nasal ANDA as well. If that probably gets approved, that's a huge market out there as well. The regulated business expected to do well. Margins have held up. And therefore, generally, I think the numbers have held up pretty well for this stock. I think within the broader markets, 2-3 stocks also stand up. I think Techno Electric is one stock that comes to mind, Surabhi, where the numbers have been stellar, in my opinion. Core business has done well. And again, I think the expectations in terms of the outlook going forward over the next 2 years stays put. Again, smart meters as a business segment expected to improve significantly. Expectations in terms of the FGD, the flue gas desulfurization part of the business, expected to continue doing well as we speak. And therefore, this is one stock which actually becomes a proxy in terms of both power, smart meters, as well as expectations in terms of the entire infrastructure. The third out of the banking names itself, our own take is that the PSU banks have done exceptionally well as well. And therefore, I think the argument that stays in favor of both valuations as well as price strength, which plays out for PSU banks, might actually continue. Obviously, there's a huge risk factor that is getting played out where the deposits degrow. But my own sense is that deposits might have a steady state show as we head into the next few quarters. The CASA deterioration will largely be behind us. And therefore, I think a stock like Bank of Baroda, though a little bit disappointing on the face of it, but our own sense is that FY26 might actually show out to be a better quarter for stock.
Got it. Okay, all right. Mayuresh, request you to stay with us for the time being. We'll wrap up on the show with the news that the Nifty, in fact, is up close to around 70 points. So let's do a quick recap. What did well in today's trading session? The latest entrance into the Nifty actually led the way. Eternal, in the last 1 week, we had $1 billion of selling because of MSCI as well as FTSE reject. All of them got gobbled up, and just take a look at it. The stock was the top gainer in today's trading session. So plenty of interest in that one. It's still at a bit of a discount in comparison